So what's gonna happen since Donald Trump is back in the office now? Whether you are excited, worried, or just here for some fun and valuable information, one thing is for sure, a Trump presidency means change. And you know what happens when change comes? Opportunity. Yes, the kind of opportunity that could make your wallet a little fatter or at least your stock portfolio a little shinier. But don't worry, this is not a political debate. I'm not here to judge whether deporting people or slapping tariffs on countries is good or bad. I'm just here to help you figure out how we can see opportunities with these changes. Because someone is going to make money off of these changes, and if that's the case, why can't you? So before we dive into the details, let's get one thing straight. You're watching this because you're smart, right? And you're smart enough to hit the subscribe button. Trust me, it's easier than figuring out how tariffs work. So go ahead and smash that button and let's jump into the video. Now, here are some key proposals Donald Trump has highlighted. Number 1, mass deportation of illegal immigrants. Number 2, imposing tariffs on countries like China and Canada. Number 3, extending tax cuts and introducing new ones. Number 4, increasing investments in the military. Number 5, rolling back regulations on financial service companies. Number 6, easing restrictions on oil and gas industry. Number 7, boosting investments in space exploration. So let's start with number 1, mass deportation. This has been a cornerstone of Trump's political agenda for years. He has consistently emphasized cracking down on illegal immigration as key part of his platform. But here's the thing, deporting large number of individuals is not as simple as signing a piece of paper. The government faces enormous financial, legal, and logistical challenges in creating or expanding the infrastructure needed to carry out such a plan. Building detention centers, organizing transportation, and managing overall process cost billions of dollars. And that's where private prisons step in. Private prison corporations are uniquely positioned to benefit from this scenario. These companies can provide the facilities and services needed for detention and deportation, essentially filling gaps in government's capacity. So right after Trump was elected as the next president for the second time, the stock prices of private prison companies like CoreCivic and GEO Group saw significant increases because of the speculation that grows around the extent of Trump's deportation policies. Now, whether profiting from mass deportation is morally acceptable or not is a whole other debate. I'll leave that part up to you to decide. My focus here is to outline what might change and where potentially opportunities could arise. After all, in any major policy shift, some industries stand to gain while others lose. Understanding these dynamics can help you make more informed decisions, whether for investing, awareness, or simply staying ahead of the curve. Number 2, tariffs. Alright, let's break down tariffs because Trump loves a good trade war. And he has hinted at 25% tariffs from imports from countries like China and Canada. But if you're imagining China and Canada personally writing checks to the US Treasury, I've got a news for you. That's not how this works. No, when Trump said he's slapping a 25% tariffs on these countries, what he really means is if your business imports products from China or Canada, you're footing the bill. And if a business is paying these tariffs, then guess how they deal with that extra cost? They pass it on to us, the consumers. But there is another side to it. Businesses might feel like, forget it, let's just move manufacturing back to the US. Now, this could open up opportunities for industries like real estate, for building factories and manufacturing plants, or transportation companies like railroads, because all those goods need to get somewhere. So while everyone's complaining about higher prices, you could be looking at stocks that are tied to these industries. But before you rush to invest, keep this in mind, it's all just speculation. These opportunities only materialize if the decisions actually happen. So don't blindly trust anyone on YouTube, always do your own research or talk to a financial advisor before making any big moves. Next up, we have tax cuts, everyone's favorite buzzword during elections. During his campaign, Donald Trump promised to extend several provisions from his famous Tax Cuts and Jobs Act of 2017, which could provide a financial break to pretty much every taxpayer. And he also proposed additional cuts ranging from eliminating taxes on tips for tipped workers or removing taxes on Social Security income for senior citizens. Now, here's the thing, tax cuts may sound amazing for general population, but their direct impact is often limited. However, there is one significant ripple effect, which is stock buybacks. So what exactly is a stock buyback? It's when a company decides to repurchase its own shares from the stock market. Now, why does this matter? When a company buys back a large chunk of its own shares, the total number of shares available in the market for that company decreases. Fewer shares mean the remaining ones automatically become more valuable, which inflates the stock price. Now, stock buybacks don't actually change companies' revenue, profit, or impact on the economy. They're not about making business better, they're about making the numbers look prettier for investors. So, who benefits from this? Any investors, even you and me, holding these stocks would see their portfolio go up. And if you're an employee in these companies who received stock-based bonuses, suddenly you find those bonuses worth a lot more, if that happens. A prime example is Apple. They have been leading the stock buyback game for years. In fact, last year alone, they bought back a whopping $110 billion worth of their own stock. That's bigger than Nike's entire market value. And they are not alone. Here's a list of companies that are also big players in the stock buyback arena. Number 4. Military spending. Another key priority Trump has emphasized is military investment. When we talk about investing in the military, it's not just about troops, it's about the equipment they use. This includes everything from cutting-edge weapon systems to tanks, armors, aircraft, and even advanced technologies like drones and cybersecurity systems. Essentially, it's about ensuring military has tools to maintain its edge on the global stage. So here's where the business side comes in. The government does not manufacture these items itself. Instead, it awards lucrative contracts to private companies that specialize in defense and aerospace manufacturing. Now, some of the heavy hitters in this space include companies like Lockheed Martin, RTX, and Northrop Grumman. These companies play a vital role in supplying the military, and as you might expect, they are publicly traded. So for investors, this creates a direct opportunities to benefit. As military spending increases, these companies often see a boost in revenue, which can drive up their stock prices. And if you're someone who keeps a close eye on sectors impacted by government policies, defense stocks might be worth exploring. But as always, do your homework before diving in. Number 5. Deregulation of financial services. Trump has also been vocal about his intention to deregulate financial service companies. Regulations in this sector are designed to protect consumers by ensuring transparency and accountability. But there is a flip side. These rules can sometimes stifle business growth by imposing limits on what companies can do. Trump has made it clear that he wants to roll back certain restrictions, particularly those affecting Wall Street institutions like banks, investment firms, and fund management companies. Now, why does this matter? Deregulation could give these companies more freedom to innovate, expand, and potentially increase their profitability. This might lead to short-term gains in the stock market, especially in the financial sector. However, it's important to note that loosening regulations can also carry risk. Historically, deregulations has been linked to financial bubbles and economic instability. For long-term investors, the key is to stay focused on strategies like dollar cost averaging, which involves regularly investing a fixed amount regardless of market conditions. If you're consistent and patient, short-term volatility becomes less of a concern and you're better positioned to build wealth over time. Number 6. Deregulation of oil and gas industry. This was a defining feature of Trump's first term, and he has already signaled his intention to double down on it in his second. Trump has spoken openly about reversing the bans on offshore drilling along much of the US coastline. These restrictions were initially put in place by outgoing Democratic President Joe Biden. In a typical Trump fashion, he even promised action on his first day back in office, declaring,
We'll put it back. I'm going to put it back on day one. I'm going to have it revoked on day one. We'll go immediately if we need to.
And who could forget his iconic slogan?
Drill, baby, drill.
Now, what does this mean for the industry? Lifting restrictions would be a huge win for oil and gas companies, giving them greater freedom to explore and extract resources. With fewer restricting hurdles, these companies could ramp up production, potentially leading to lower energy costs and higher profits for industry players. For investors, this could make oil and gas stocks an attractive option, especially if global demands for energy remain strong. Number 7. Space exploration. Finally, let's talk about the stars. I mean, literally. Trump has long been an advocate for increased investment in space exploration. Even during his first term, he pushed for initiatives that would boost America's presence in space. Now, following his re-election, this focus has continued and we're already seeing the impact. Companies involved in space exploration like Rocket Lab, Redwire, Intuitive Machines have experienced a surge in stock prices. Their valuations have more than doubled within just a couple months. So this growing interest in space isn't just about national pride, it's also about business. The commercial space industry is expanding rapidly, with opportunities ranging from satellite deployment to space tourism. If Trump's administration follows through on his promises, this sector could see even greater growth, creating exciting opportunities for both innovation and investment. So, love him or hate him, Trump's presidency could shake things up in ways that might flatten your wallet if you play your cards right. But remember, speculation is not a guarantee. Do your homework, diversify your investment, and consult a financial advisor if needed. And watch this video if you want to learn about optimal order of investing your money in 2025, and may your investments trump your expectations.